Good morning, 8:29 a.m. 9/17/2011, Saturday morning. And what do we have before us? We have the weekly NASDAQ Transportation. It's very important to understand because it is part of the major economy as we understand it. And the problem is that when the transports don't act well, that means that the U.S. economic growth has to be contracting because the stocks that are involved in the NASDAQ transports, this is a NASDAQ comp, and there are various different types of diversified companies that ship things around. Okay? So, if these stocks are losing value, if these stocks in their sectors related to the NASDAQ transportation is that they're losing value, then we're not shipping as much. We have an October earnings season upon us, and it must be benchmarked as the calendar 2011 yearly low in the NASDAQ 100. And that is how we are going to look at this weighting and the leadership stocks that will be included. And during the October earnings season, when these companies go into their reporting session for 2011, we're going to find out in October 11th, they're going to start those earnings. And basically, this is your calendar volatility yearly low. Let's take a look at when StockMarketFunding.com is always watching this and trading within here. And the thing about it is that when we had the first reversal, we called that, it's on our website, before the fact, not after the fact. We also called this one here before the fact, not after the fact. And then we went straight down and we put in weekly lows within the volatility price structure that the current public people involved within the Wall Street transactions, they can't keep up with it. They're fearful of it. And MMT apprenticeship enrollees are taught how to adjust the weighted risk to volatility at support, resistance, and consolidation levels, and understanding what the key concepts between a market maker model versus a public model. And the transports had the volatility. We have the huge weekly breakout to the 200-week moving average, and it's right here. We have the very long declining weekly moving average and the 20 weekly moving average going over the top of this pink line is the 50-week. One of the things that we would like to emphasize is that this line right here is referred to as a 100-week moving average. So that we've had a complete huge breakout in a 5-day area within the NASDAQ transportation stocks. And that was this last calendar 5 days. Today is Saturday. Now we're going to start a new week on 9/19/2011. And we're going to watch and see what the true consolidation and where these transports are weighted, because it's going to tell us a little bit more about the public sentiment and what is that public psychological model that they think in. Okay? Right now, we've got a breakout in progress. We're going to have to see that 100-week moving average up here. That 10-week will have to stop going down in value and at some point hit flat to be able to verify these lows. My main thing, MMTs, for you to know where this is, as of the closing bell on the weekly level here, that this is your weekly level. 9/11 is when it started. And you opened at 2014 and the high was 2167, but the lows were 1991 and the close for the weekly close now, here it is, 2153.17, slightly below the high of 2167.51. Now, having said that, the declining 10-week moving average, that weekly moving average MMT, as a public reference, is 2190.50. Naturally, it will trade throughout the 5 days. For us to get a continued rally, transports, whether it's the Dow and or NASDAQ, they need to lead the way. Okay? Now, fundamentally and all of that, when we get into the October earnings season, hey, that's a whole different story. Right now, the risk on trade is on. And people that have underperformed the yearly S&P 500 index of the calendar year of 2011 to 9/16/2011 closing bell, they're underperforming the broader markets. So therefore, what is going to end up happening is the following week that starts Monday is how we go through that 200-week moving average up to the 100. But we would need another weekly buy bar starting, and you will verify it on your 60-minute charts between who's weighted here. And if we're going to go up and test these moving averages, we ripped right into it last time within the volatility right here. We had a double week upside, beautiful trade in right to that line, and we popped right back down and held that bottom. And when we took out that previous half weekly bar right here, that was when those transports were kicking, and the 5-day triple witch options expiration was in full bloom within the transportation. So people will be chasing year-end performance as you break through the highs here. You must break through here 2 to 3 times the normal volume. That would be very convincing that you're breaking through not only with high price volume across the board in the NASDAQ transports to get through here. And you want to see where it's 2 times greater volume would be great, 1.5 times. But once again, people chasing that performance and getting that risk on trade, there's going to have to be a lot of it to clear these weekly moving averages in the very, very short term.